1. Why everyone is talking about the Federal Reserve. What if I told you that one decision made in Washington could affect your mortgage, your credit card bill, your investments, your savings, and even the price of groceries? Sounds impossible, right? But that is exactly what the Federal Reserve can do. Every time the Fed changes interest rates, millions of Americans feel the impact, even if they don't realize it. So, what is the Federal Reserve? Why does it raise or lower interest rates, and how does that affect your money? Let's find out. 2. What is the Federal Reserve? Think of the U.S. economy as a car. If the car is moving too slowly, businesses struggle, unemployment can rise, and economic growth weakens. If the car moves too fast, prices begin rising quickly, and inflation becomes a problem. The Federal Reserve, often called the Fed, tries to keep the economy moving at a healthy and balanced speed. Its main goal is to promote stable prices, support employment, and help maintain a healthy financial system. 3. The Fed's most powerful tool. The Federal Reserve has many responsibilities, but its most powerful tool is interest rates. When inflation becomes too high, the Fed may raise interest rates. Higher interest rates make borrowing money more expensive. Home loans may cost more. Car loans may become more expensive. Credit card interest can increase. Business loans may also become more costly. As borrowing slows, people and businesses often spend less money. When demand begins to cool, inflation may gradually slow down. That is one of the main ways the Fed tries to control rising prices. 4. What happens when the economy slows? Now imagine the opposite situation. The economy becomes weak. Businesses reduce hiring. Consumers spend less. Economic growth slows. In this case, the Federal Reserve may lower interest rates. Lower interest rates make borrowing cheaper. Families may decide to buy homes. Businesses may invest in expansion. Consumers may spend more. This additional spending can help strengthen economic activity. That is why every Federal Reserve meeting receives so much attention from investors around the world. 5. Does the Fed control everything? Many people believe the Federal Reserve directly controls stock prices, gas prices, or grocery prices. That is not true. Instead, the Fed influences overall financial conditions. Its decisions affect borrowing costs, business investments, consumer spending, and investor confidence. Markets then react based on expectations. Sometimes stocks rise after a Fed announcement. Sometimes they fall. It all depends on whether the decision was better or worse than investors expected. 6. How does this affect your daily life? If interest rates stay high, saving money may become more rewarding because banks often offer better returns on savings accounts and certificates of deposit. However, borrowing money may become more expensive. Buying a house could cost more. Financing a new car may become less affordable. Businesses may also delay expansion because loans are more expensive. If interest rates fall, borrowing usually becomes cheaper. People may spend more. Businesses may hire more workers. Economic activity can improve. Every Federal Reserve decision creates both opportunities and challenges. 7. What should investors do? One of the biggest mistakes investors make is reacting emotionally to every headline. History has shown that interest rates rise and fall in cycles. Successful long-term investors often stay focused on their financial goals instead of making decisions based on fear. Understanding why the Federal Reserve changes interest rates can help you remain calm when markets become volatile. Knowledge is often one of the most valuable investments you can make. 8. Conclusion. The next time you hear that the Federal Reserve has changed interest rates, remember that it is much more than just another news headline. It can influence mortgages, savings accounts, investments, business activity, employment, inflation, and your everyday spending. The Federal Reserve may not control every part of the economy, but its decisions affect millions of Americans every single day. The better you understand how it works, the better prepared you will be to make smarter financial decisions. If you enjoyed this video, subscribe for more simple explanations about investing, banking, insurance, personal finance, and the economy. Thank you for watching. I will see you in the next video.